All right, guys. So today we'll be talking about the dynamic support and resistance. Now, why dynamic support and resistance? Remember I said something. I said the support and resistance are what actually gave the market a structure and enables the market. What actually gives the market a structure and enables the market moves in a wave-like direction, just like this. Now, a situation whereby they are not dynamic support and resistance, the market will only move in a straight line and drop also in a straight line. And so this structure you are seeing is what we call the market structure. And what gives rise to the market structure is the what? The dynamic support and resistance level on our charts. And that is why we are having a dynamic support and resistance class today. Now, when something is dynamic, it means a movement. It moves, the thing moves, unlike something that is static. So because of its moves, we want to be able to spot out key level areas, key areas where the market is going to retrace from, where the market is going to retrace to, or where the market is going to reject and break out from, in order for us to do what? Continue the upward movement in the trend or the downward movement of a trend, depending on whatever trend we are trading. Depending on whatsoever trend we are trading. Now, the dynamic support and resistance region are mostly used for picking out key level areas where market is likely to reverse to. And like I said in our previous videos, the first one is the trend lines. And I talked about the trend lines in our previous video. The first one is the trend lines. So the second one is the moving average. The moving average is an indicator I use so much, and I prefer using the indicator even more than using other blocks, for those who understand what other blocks is. But I also trade with the other blocks. And the next one I make use of is what? The Fibonacci. But I don't use Fibonacci in the indicators for trading. I don't use it. I mostly make use of just this, the moving average and trend line, this trend line and the moving average. I love to make use of these two. So I'm going to show us a chart example, so we'll be able to see what it's all about. Now, this is my chart. This is my chart. As you can see, we have the moving average there. Now, remember I said the dynamic support and resistance region is used for what? Predicting key level areas where price is likely to reverse from as the trend continues. Now, this is a bearish trend. And this being a bearish trend, I apply my trend line. You see, you can see what the trend line does for us. Don't forget the rules. It must touch 3 weeks. 1, 2, and 3. Then the other one can touch 2. Now, look at what happened here. Price did what? Dropped in a descending manner, dropping this way. We have this drop. This was a key level area. Price went back up, drop again, move up, drop again, move up, drop again, move up, drop. And this is what price did until we have this what? Bullish movement. Now, all this place you are seeing is as a result of what we call the market structure. This is the market structure that price is forming. That is why I said the dynamic support and resistance region help us to form what? The market structure. Now, the first one is the trend line. Of course, you see how I put my trend line. The second one we want to talk about, is the moving average. Now, look at the moving averages. If you notice, price tends to reverse from every area after the touch of the moving average. They move closer to the moving average region. Are you seeing it? And when they respected it, they do what? They drop. And look at it here. We have the breakout on here, and they touch there and they move up. So this is what I basically use for dynamic support and resistance region. The trend line and the moving average. I don't make use of Fibonacci, and I don't see any reason why it's being used. But that doesn't mean I cannot make use of it. I can already, because I understand the dynamics of the market. So Fibonacci is just for me to be able to understand key level areas, to be able to pick my key level areas if that place pass for a good level. And let me just, for sake of this class, I'm going to show us the Fibonacci. Now, this is my Fibonacci. If I want to know where the market will trace to, I'm going to pick the top and the bottom of a full trend. Can you see? Now, these levels 0, 0, 23, 38, 50, 61 are likely areas where the market tends to do what? Retrace to. And so these are the places I want to find my what? I want to find my retracement zone. Then the market drops. The market drops. Now, very quickly, before we end the class, I want to show us the anatomy of a trend movement. The anatomy of a trend movement. Now, market moves in trend. Market moves in trend. Market moves in trend. Market move in trend and in phases. Now, the first phase is an uptrend. The second one is a downtrend. And the third one is the range. We call it the range or the accumulation or the distribution whatsoever. But now this is what the market does. And now what consists the market trend? Two things, the impulse move and the corrective move. These two things gives us the trend. Now, when they have the breakout of this impulse move here, up, we have another correction, we have another impulse move, we have another correction, impulse correction, impulse correction, impulse correction. Now, this movement, impulse and the correction gives us what we call a trend. And for this sake, this is an uptrend. Now, in order for us to have a downtrend, we'll have a break of the structure. When we have the break of the structure, the market goes back and does this. Downward, up, downward, up, downward, up. That means the impulse downward move and the upward corrective move. And the market keeps going downward. This is how the market moves. Then the last thing the market is going to do is to range in this manner. Ranging is when the market moves from one point to another point without changing direction. Look at it. This is a range. The market keeps touching the top and the bottom, a support and resistance level, forming a channel-like pattern. This is a range. Unlike this one that has the what? The movement up and the movement down. So these are the three phases the market will always do. Either the market is trending downward, or the market is trending upward, or the market is what? Ranging. So in the next class, we are going to talk about key level areas.